Hey guys, thanks for watching another episode of the Real Tea with ESG. I'm your host, Saint-Gerard. Today's special guest is Stephen Rosen. He's a CPA. He was a former New Yorker, and he left us to go to Florida, nice and warm, while we're freezing over here. Anyway, Stephen is here to talk to us about, let's talk about the last 3 years, what's been going on. A lot of us basically have been working from home. A lot of us basically have been doing new businesses, or basically their current business, they're working from home and they're utilizing a home office. So Steve is going to talk to us about how to get a legitimate home office deduction. So Stephen, floor is yours.
Thank you. So home office has been challenged in the past, and some rules for a couple of years got really tough, and then they got a little bit easier to deduct it. And the fact that so many people are working remotely now, it doesn't change filing requirements. Like if New Yorkers went out to Maryland because their office was closed and their home or the primary office where they work is in New York, New York's going to be looking for income tax. But that's a separate issue from what we're talking about. Basically, with home office, you need to have an area set aside for an office that is used exclusively for an office. If I scan this room, you would see 4 computer screens and printers and scanners, and you could see a scanner right there behind me. Anyway, but I have another office, and it's a grand total of 4 miles away. And but I do work out of the house when I can. Anyway, so what does that mean that you have an area set aside? It's a measuring factor is either square footage. So let's say you've got a 2,000 square foot living space, and 10% of it, or 200 square feet, is used for an office. So on the home office schedule, which is Form 8829, you get to allocate some expenses. Some of the expenses would ordinarily go on Schedule A itemized deductions, like real estate taxes and mortgage interest. Those are the only deductions, in addition to mortgage insurance for some people, that you can deduct for your home. But if you're going to allocate, say, 10% or 12.5% of your mortgage interest and real estate taxes to Form 8829, the balance gets thrown back onto your itemized deduction schedule. So let's just throw out some round numbers. 200 will be deducted on your 8829, your home office schedule, and 1,800 will be deducted as an itemized deduction. And what's interesting there is, if you do have a home office, a lot of people aren't itemizing anymore because they made the standard deduction so high. So allocating to a home office, if it's a legitimate home office and you are working out of your home, it's like an added benefit. And then some of the other things, if you think of office expenses, you get to deduct percentages of insurance, if rent, if it's not owned, if you're just renting your place, repairs and maintenance, utilities, that's always a big deal. I mean, I'm using home utilities now just to be on the Zoom call. I don't necessarily deduct home office because my office is right nearby. So I have no legitimate reason to deduct home office. A doctor who works in a hospital who does not have office space and who has to do all of his scheduling at his home office might have a shot at a deduction there. But if they give him office space in the hospital, then IRS is going to knock it out if he gets audited. Okay. So the importance is there has to be a dedicated space. And I'll give you a little example. My son, who does very well, has been working remotely for 2 years. And when went to do his tax return last year, I said, by the way, you're working at home. How much, you have a home office? Yeah. How much space do you use? He goes, the corner of my bed. I said that, and he's paying $4,000 a month in New York City, so no, that doesn't quite count. If he said 1 bedroom out of 4, then we could have been talking some good stuff there. So to summarize the home office expense, you have to have a designated area. And then either, listen, some people will say, I have 1 room out of 8. Or if you looked at a set of floor plans, you could actually figure out by square footage how much you're using. And you get to allocate some of your mortgage interest, your real estate taxes, your liability insurance, any repairs, your utilities. And that's part of it. The other part of it is you could actually depreciate a portion of your home in that same percentage. And there's some ramifications to the depreciation, which I'll touch on in a little while. How do you report this? Okay, well, if you're a Schedule C, either a single member LLC, an unincorporated business, and you file a business Schedule C on your personal return, on the bottom of the Schedule C, there's a couple of line items for home office. And the 8829 expense will populate on the bottom of that Schedule C. What if you're an S corporation and you work out of your house? Well, there's no 8829 that goes on a home office. So basically, I would list, and I do it for clients, on an Excel schedule, what the home expenses are, what percentage you're using, and then we would make a journal entry on the S corp. IRS is not crazy about that, but that's how it's done. There's 2 different things. One, there's IRS rules, and the other thing is, how do you deal with the IRS rules? And if you talk to 10 different accountants, you're going to get 10 different answers. This is my answer. That's how I do it.
Talk to your accountant to get the answer. What if they want someone trustworthy, someone who's been in the Wall Street Journal, who's been quoted in the Wall Street Journal, such as Stephen? You might want to reach out to Stephen.
Thank you. And listen, there's ways to stretch things, but basically, I don't work for IRS. I work for my client, and I'm not going to let my client come up with any nonsense deductions. First of all, there's serious preparer penalties. I'm not putting my license on the line for anybody. So things get done legitimately with a twist, the twist being, what do we feel is reasonable that we could defend in an IRS audit? Okay, and again, you interpret rules. There's some things are black and white, and other things are subject to interpretation. And I'm a member of, I don't know, 3 or 4 national organizations for different areas of accounting and tax resolution. A good percentage of my practice is dealing with IRS issues. I'm a member of the American Society of Tax Problem Solvers. And even there, I could speak to 5 people and get 5 different answers. And I may not agree with any of these experts, then it's my decision on how I want to handle a situation.
I think the most important thing is basically people need to talk this out with the professional, such as yourself, and then come up with a game plan, whatever the situation is. Have a conversation with your professional.
So now let me go back to depreciating that portion of your home that's a home office. We discussed in an earlier session the sale of a personal residence and how you get a $250,000 exclusion of gain if you're single and a $500,000 exclusion of gain if you're married filing jointly. When you are depreciating a home office, if you go to sell that home office, you may lose part of that exclusion. So I ask every client, what are your plans for your house? I'm never moving. Oh, we're going to list it next year. Then I'm not going to bother taking the depreciation because the exclusion is more important.
Okay, it's good to know. All right. Is there anything else you want to add or you feel that people should know about the subject right now that we didn't cover?
I'll say no, and then 5 minutes from now, I'll say, oh crap, I should have said this. But
well, that's why we do the miracle of video. We can always add stuff later on.
Well, I'm looking at the 8829 and I've covered everything that's on there, everything that's of significance. I mean, every situation is different. And, if you have a knowledgeable CPA, and I'm not knocking these, walk-in tax prep services, but I take 40 credits of continuing education a year. That's what I'm required to take. And I take a hell of a lot more than that because there's always something coming up that I need a refresher on, especially in the last few years when the tax laws changed in 2017. And every year they get tweaked. And the tax law change in 2017 was one of the real biggies. I mean, I remember the Tax Reform Act of 1986, and we don't have to get into some of the changes there. But since we're talking about real estate, and another topic that we could talk about some other time are passive activity losses, where your losses are limited, and it's a whole big topic.
I think you hit everything on the head, basically, where you said you need a professional who is well versed with this stuff and still continuing educating themselves so they can educate their clients. Whoever is watching this, they need to do their homework with who they decide to work with. So obviously they want somebody who's well versed who can break this stuff down for them also.
By the way, I didn't move to Florida to retire. My practice has grown enormously since I've been down here. It was just time to get out of the cold.
Well, we find a lot of our clients are doing that also. That's why we keep doing these videos. So just in case they want to move elsewhere to warmer climates, we have contacts everywhere throughout the country. So as you can see, he was originally a New Yorker and he's out to Florida, which everybody goes to Florida at some point in their life.
And you remind me now of another topic for the future, which is how do you show that you're no longer a New York resident? And residency audits are a big way that New York raises revenue, especially now that they're scrounging for cash. But that also is a major topic for another time.
All right. So, well, guys, stay tuned. This topic is a hot one, as Stephen mentioned. So we're going to be talking about that at the later date. Stay tuned. So feel free to share this video with your friends, family, anybody who you think would find some interest. And I hope you guys got value out of this. And there'll be a series of more videos coming soon. So on that note, I hope you enjoyed the Real Tea with ESG and Stephen. I can't make your name rhyme with my name, so Stephen Rosen. All right, guys, thanks for watching. Have a good one.